Welcome to Gold Silver Pros.
Hey everybody, this is your host Rob Kientz with 𝑘𝙃𝑠ilvrpros.com or www.goldsilverpros.com. It is Tuesday, March 12th. This will be the first video I've done in a week because last week I was traveling quite a bit. I was at PDAC giving a presentation. Then I had a very special meeting this past weekend, and in between, I lost my voice anyway due to allergy problems. So we are back for the first time. We're going to do our weekly market wrap-up as we typically do on Tuesdays. And I'm going to go over what's happened the last couple of weeks in the economic data and what we're seeing in the COT report with gold and silver. I think you guys will be really interested in that. And at the end, a very special announcement for a very dear friend of mine and of many of yours who has come upon some medical problems. We'll get into that at the end. I don't want to speak about that for a moment. But without further ado, let's go look at the data and what we got. Looking over economic reports and data and all that kind of stuff. Last week, while I was gone, a couple of numbers came out, nothing super substantial, but factory orders have fallen 3.6% on expectations. They might fall 3%, so a little bit more. And last month, they only fell 0.3%. So we have declining factory orders, which does not surprise me. I think we're in a deflationary wave in terms of production in the United States overall. Even though GDP is up, most of that is based on debt. It's government spending and it's credit card spending and other type of debt-based spending by consumers. Overall, ADP employment had a nice positive number of 140,000 jobs created. That was less than expectations of 150, but it was more than last month of 107. We had the regular jobs report came out, and I think it was something like 380,000 jobs. Well, no, the regular jobs report came out, but I want to focus on January because that was revised. Originally, there were something like 370,000 jobs created, and then it came down to 229. It was a fall of about 35% of jobs revised down for January of this year. And that just goes to show that the employment reports are fugazi. They're a mess. And then they constantly get revised downward most of the time, not every month, but most of the time later. So anybody expecting that we had, this early year euphoria we had in the first quarter where all the economic numbers seemed like they turned around. Well, they hadn't really turned around. They're not any better really than what we expected. And that's unfortunately what we see when the government revises their numbers down. There are 8.9 million job openings, but that has not moved up. Jobless claims have stayed the same as last month at 217,000. U.S. productivity stayed the same at 3.2%. That's an increase of 3.2%. And overall, consumer credit still using $19.5 billion of consumer credit last month, which is a lot. The non-farm payrolls, the government payroll reporting came in higher, but because we know that's probably going to be revised down and their methodology is complete crap at this point, I don't trust any government employment numbers. I think employment is a lot worse than what you're getting from the financial media. Overall, the U.S. unemployment rate, the U3 number that gets promoted in the media, has gone up to 3.9%. And that's got to be concerning for the Fed. And I'll tell you why here in a moment. For this week, the big number so far is the CPI. It's up 0.4% over last month, 0.4% over last month. Annually, dating back to the same month last year, it's up 3.2, which is higher than what the Fed wants, and it has increased. And I'll show you a chart on that in a little bit as we get further into it. But overall, not great things going on with the economy. The numbers are seasonally adjusted. They're all down. They're lower than what we think. And overall, that's not great things for markets. Cryptocurrency markets are doing really well. Bitcoin's leading, of course. It's up to 71,192 at time of this reporting, which is about noon on Tuesday. Changed. It's down almost $1,100 today, down $1,099.92. But overall, Bitcoin and the cryptocurrency complex are up. Bitcoin, of course, leading the way in the resurgence, and Bitcoin again is about to reset new all-time highs. Moving over to bonds, the bond rates are up. I always look at the 2 and the 10-year because those are the two biggest benchmark bond indicators for short and long term for U.S. Treasuries. And it also, they're the two that are measured for yield curve inversions, which are predictors of recession. The 2-year is up, trading 4.593%, up 0.059 on the day. And the 10-year is up 0.049 to 4.153. Again, 2-year charging more than 10-year means that we're in or we're likely either in a recession or it's predicting a recession. It's been that way for 7, 8, 9 months. And I think personally we're in a recession right now. The overall markets are up. Dow jumps more than 200 points as NVIDIA and tech shares resume rally. So this stock story is driving up the Dow Jones, the S&P, and the NASDAQ today. Well, the Russell is down just a bit, but overall stock markets are up based on what? Stocks, not on fundamental data, but on stocks. And what happens when stocks start to roll over because the economic data happens first. Bad economic data leads to bad performance, which eventually leads to bad results in the stock market. You're going to see those stock prices come down. Those that actually follow the fundamentals and the data would have known that ahead of time. Those are just following their stock portfolios, likely think everything's okay, and they have no idea the tsunami that's coming. I'm going to get into the news, and we're going to talk about that. And then I'm going to get into analysis of gold and silver markets, and then that special announcement that I mentioned. One thing that's starting to become a big concern is violent crime. Headline here from Zero Hedge, quote, "Deluge of violent crime sees Philly transit boss call for National Guard following New York City's lead." So now we have National Guard in two major cities in the U.S., the New York City, as well as Philly. And that's what happens when you have all this illegal immigration. And it leads to people enacting violent crime, and people don't feel safe. You have to call in the National Guard. My only question is with all the illegal immigration that we've got going on, does that mean the National Guard are going to come in everywhere? We're going to have martial law, or in effect martial law, even without the president calling it, based upon these various cities calling in the National Guard. So the big question is, well, we have martial law. Do we effectively have martial law in the United States? Well, when you run out National Guard to deal with crime, not something most people in this day and age are used to in the United States. I could say probably it's closer to martial law than most people in the most recent generations have ever experienced. Another story, Boeing chaos hit Southwest Air, shares collapsed most since COVID. Southwest Airlines couldn't get all the planes it ordered. I think it ordered 79. It's only getting 46 of the MAX delivered this year. So they had to reduce the amount of flights that they're going to have. I think they primarily rely on this plane in their fleet. I'm sure that they may be able to get some other planes, but given how long it takes to source these and get them delivered, it's hitting Boeing, which shares have plunged 13%, and it's also hitting shares of Southwest Airlines. Not great for you if you guys are invested in those. Looking at the Biden budget, another story I wanted to cover, yesterday's release of Biden's $7.3 trillion budget. The Biden administration bragged about lowering the deficit by $3 trillion over the next decade. Of course, it's not going to do that. That would consist of roughly $2.6 trillion over 10 years, and additional spending programs offset by $4.8 trillion in tax increases over the same period. The problem is when you account for tax increases, it doesn't account for the amount of people that change their behavior so as not to pay the tax. So we're probably not going to get the tax increases. Usually tax decreases are what spurs more revenue overall, and this doesn't look to do it. The budget would also make some different changes to the tax code. It would increase the corporate alternative minimum tax on booked income from 15% to 21%, raising potentially $137 billion over the next decade. Of course, that's just going to cause a higher tax burden for corporations who are already burdened by debt and are also suffering right now with a labor crisis and an inflation crisis. The largest proposed tax increases include raising the corporate minimum tax from 21 to 28%, as well as a series of tax increases on high-income earners, including new Medicare taxes and 25% minimum taxes on income over 100 million. That's not going to pass in the current Congress, probably, but that's what's been proposed, and I think it's insanity. If you're raising taxes and increasing spending, it's going to make the current economic situation a lot worse. One of the things I want to do is share with you what we're seeing going on around the world. So I've got you something I want to present from Twitter about what's going on in Haiti, and here are some pictures, as you can see up on screen, taken by Ian Miles Chong here off of X. And it's lawlessness. And as he writes, Haiti has collapsed. The president is no longer in the country. The ports are officially closed. Cannibal gangs are besieging the National Palace in Port-au-Prince. And you can see here, it's basically way beyond martial law. There is no law. So I don't know what's better, martial law or no law. Comparing what we have here going on with some cities in the United States to what's going on around the world. But what's most obvious is what's going on in the world isn't going away anytime soon. And things are getting worse, not better. And it's not just in the numbers, it's in what you're seeing. Desperate people, desperate times call for, unfortunately, desperate measures and lead to more lawlessness. Moving over here to the United States, Missouri teen arrested after footage shows her brutally beating a girl into a seizure. Now, this is available on X if anybody wants to see it. I've watched the video. It's horrible. I've seen a couple of attacks on looks like prejudice motivated attacks, most of them on whites, but I'm sure they occur, in all combinations recently. But it's involved a young boy and now a young girl. Her head was smashed on the ground so many times she's in critical condition, had a seizure, and may die. And this is going on just because of racial tensions that are brewing up in the economy. It's not going away anytime soon, and this news is not good. It's all over the world, and that's why I'm bringing you, sort of the sights, the sounds, and the pictures. Looking now, we're going to go over gold and silver. I'm just going to whip through that real quick. The big thing is the COT report, which I'll show you here in a minute. But let's go over the volume and open interest. You see an increased volume here. Gold price has been rising, and there's a little bit of a smash down going on in basically the last day. But overall, there's a lot of open interest actually going to the long side, which tells me this is a real rally, at least the current rally. I'm not talking 6 months, a year out, but I'm talking about what we're seeing now is a real rally because it's on an increase in interest on the long side of gold and silver. But I'll also show you how certain parties are taking the short side of that. Of course, you'll see that in the COT report. And of course, who that's going to be more than likely. What I tend to pay attention to is what is the big contract month. Right now, it's April in gold. And so far, we've had deliveries 1,567. I'll show you the overall deliveries here in a minute when we get to the NYMEX metal counts. But overall, the market is robust and there are deliveries and there are people searching for gold via EFP mechanism. Now, it could be they're searching for differences in gold price, or they may be searching for exposure to the OTC market in London. I say this every week, potentially to get the physical. Some people say, no, they can't get the physical that way. Well, yes, they can. According to the CME Group's website, you can get physical if somebody accepts that OTC and wants to physically deliver, but it doesn't always have to be. Sometimes they're just playing price arbitrage, or they're moving exposure from one market to another for another reason. They have another product or another risk or another financial obligation that they have to solve. But in any case, the increase in EFPs has been a relatively recent phenomenon in the last couple of years, and it's spiking up more and more as an indication that gold is not priced appropriately in the American market compared to others. That's the easy clue that we can dig out of this data. So in April, we had 2,818 EFPs on the latest report. That was yesterday's report. If we go back to last week on Friday, we had 2,966. I'm looking down here on the April line here that I'm highlighting and come down from EFP, which is exchange for physical. 2,966 on Friday. Thursday, we have 7,499. That's astounding for one day. You're telling me that they're just hunting for price exposure, or are they hunting for gold? The day before on Wednesday, 75.31. That's almost 16,000 contracts of gold moving over to London in 2 days, and then another 44.90. So people are obviously going over to London to see what they can get. And that either at the very minimum tells you that price is too low, more than likely, or is just off in the American market compared with the London market. But more than likely, they're also hunting for some physical just to see if they can get exposure. We have, as of 1:30 p.m. Eastern time, preliminary data on today's markets. And so far, estimated volume totals are 331,590. We're down on the dominant contract right now in silver, in gold, which is April, down $22.50. It's been a down day after about a week of it being up. Let's go back and look at Monday's data. We were up $3 on Monday. If we go to Friday's data, we're up about $20.30. If we go back to Thursday's data, we were up $7. And if we go to Wednesday's data, we're up $16.30. So a nice week for gold, a little bit of a pullback today, which is completely understandable. After you reset a new all-time high, I think it got up to like 2180 something, which is officially a new all-time high. So gold's hitting new all-time highs much more frequently now. It did it in 2020, then it did it last year in 2023 because of the bank failures, and now it's doing it. And it did it at the beginning of this year, 2024, very briefly on an opening Sunday before it got smashed down, and then it's doing it again. So we've seen 3 new all-time highs in the last about year to 18 months, and then another one in 2020. So gold is continuing to march up, and I think that's an indication that people really want gold, and that gold is resuming its place as an asset of last resort and as a monetary asset here in the global financial system. Moving over to silver futures, looking at the tail of the tape. As we look at volume and OI, of course, increased interest in silver as of late, not so much as of yesterday, but the week leading up to it. And silver did pretty well too. It was rising. Looking at the dominant month right now is May, because we have this 114,000 open interest currently, and we're still adding for May. So May is still the month du jour of trading in silver. Overall, EFPs, we had slightly less, 300 on silver on Monday's data. On Friday's data, the EFP 722. And on Thursday's data, 4,040. Holy cow. So Thursday and Wednesday were big on EFPs for both gold and silver. Something Wednesday and Thursday, the 6th and the 7th. People took their contract in the U.S. and went over to London, hunting either for price differences or metal. At the very least, it means price is done wrong here. It's not matching the world markets, or People are hunting for physical. It would not surprise me at all. Looking at the settlement data, down about 32 cents today on the early trading data. If we go back and we look at Monday's data, we were up 16 cents. So an up day for silver yesterday. Last week was up most of the time, except for Friday was down 2.9 cents. Thursday was up 8.5 cents. And last Wednesday, we were up about 50 cents. So overall, gold, silver doing very well. However, the big smash has come. Check out the CFTC report. Now, this is the latest one right off of their website. Disaggregated commitments of traders futures only, March 5th, 2024. And what we're looking at here is the latest COT report. This is where we look at who's doing what in terms of positioning for the markets. I always kind of start down here when I'm reading this chart. And who are the biggest 8 or less long and short traders? Well, the biggest concentrations are on the short side, not the long. And it has to do with the biggest 4 and 8, meaning there are people taking concentrated positions on the short side, whereas the rest of the market is more diffuse or more democratic on the long side. There are more participants going long, but there are concentrated shorts, mostly by banks on the short side. 33% of all short positions in silver are held by 4 banks, basically, as you can see, and almost 50% by 8 entities, most of them banks as well. And you can see the swap dealers through March 5th added a crap ton of short paper to the silver, to the short side. So they added 8,148 contracts and got rid of 2,878 long contracts for a change of position of almost 11,000 contracts net short. So total, the swap dealers or the bullion banks are short 42,577 contracts in silver. This is through March 5th. We don't have current data. It's the way the data is put out. This is on their website, the most current. But 42,577 to 33,308. So about 9,000 give or take contracts to the short side. And that, I mean, the banks are just really hammering the short. The other side of the trade was taken by the managed money. They went long to the tune of over 18,000 contracts net, almost 19,000 when you add that they added 72.64 long and subtracted 11.631 short. And that is for silver. Let's move on to gold. You go down here to gold, same date, March 5th, 2024, gold. And we see the concentration of shorts down here. 4 or less traders short, 30% of short is done by 4 traders, all banks, the big banks. We know that from both this report and the Office of the Comptroller of the Currency Report, which I show you guys quite often, usually a couple, 3 times a year. The 8 or largest traders short is 45.5%, again, indicating that this market has strong concentrated short positions, while the long positions are more diffuse. If you look at long, 22.5% top 8 traders is only half of the concentration that we have in short. So the shorts really are just a few entities doing most of the shorting. Well, they may be doing it for themselves or their clients, but they're taking all the shorting, most of it, and putting it in there. Now, producer merchants go short quite a bit because they're taking a short to protect against downside risk. So you'll see a concentration of short positions from producer merchants, mostly producers, because they're trying to protect their mine output in the future. And if the price falls, they need insurance against that for any potential losses they may have in their mining process. So they'll take a short position. So if the price falls, they'll earn the insurance money in the market as they gain on that position, which offsets the losses they may have had from getting lower silver prices than what they planned. And it's cheap insurance. So if the price goes up, they lose a little bit of money for having the contract, but it's cheaper than losing the money if the price falls. So that's the way that happens. Well, so you understand the producer merchants having a concentrated short position, but not the swap dealers. But they added 37,491 short positions in gold through March 5th and subtracted 1734 long. That's about 39,000 contracts, give or take, more to the short side. So they have re-increased their position. 234,000 contracts to the short side, 77 long. That's over a 3-to-1 position short, the swap dealers. Nobody else has that sort of concentration except for the managed money's going long. They're up almost 4.5 times long position, 145,000 long contracts to 35,000 short managed money. They're betting on gold going long, and that's the long-term thesis. But right now they're going to be washed out by all this shorting paper trading, which is done by the bullion banks, unfortunately. Hate to see that happen, but that's the way that market works. Going over to the NYMEX deliveries, we're going to look at COMEX gold futures, and this is deliveries through yesterday. And this is a yearly chart, so we're going to look at different months. So in gold, previous December is always a big delivery month, 15,134 contracts. You can see down here at the bottom, go to December over here and come down. 7,300 contracts in January, 20,754 in February, and 4,623 in March. Leading off the year, there have been more deliveries the first 3 months of the year and adding in the 15,000 contracts we had in December than I've seen in a long time. Usually you have a really big month and a small month. And this is kind of following that program, big, small month, but each of the smaller months is bigger than they've previously been in previous years. So net, we're taking more delivery off of the COMEX of gold than I've seen in a very long time. And that's the takeaway that you need to know. Well, let's go down to silvers and see where silver is. Oh, we'll pass palladium onto the silver 5,000. Here's silver 5,000 futures. We'll scroll down to the bottom so we can get the control totals. Here's COMEX 5,000 silver futures. You can see highlighted right here. And we've had a lot of silver deliveries as well. 4,051 in December. Of course, that's last year. But this year leading off 1,360 in January, 1,308 in February, and 5,080 in March. So big delivery months about gold and silver. And even the slow months were delivering quite a lot. That's a big thing that's going on in the gold and silver market. And I think it's indicating that the market wants the metal. And the amount of EFPs, exchange for physical, going from here over to London means at the very least we're priced too cheap here, more than likely, or just priced wrong. And so people are going over there hunting for price differences. But given the size of the EFP mechanism, I think that they're actually trying to get access to the metal. Because if you take a position in London, my understanding is that you can also try to get delivery. You're getting exposure to that pool, that somewhat unallocated pool of metal, but you're also maybe trying to get the metal itself. And some people may be blocked from getting it in the COMEX, and they may be rolling over there to London to see if they can get it. We'll see, sort of how that shapes out, but it looks like that's sort of the trend. We've seen that trend now for quite some time, and that's probably what's happening. As chaos in the world starts to get more and more and more, the fundamentals start to get worse and worse and worse. We're starting to see riots. We're starting to see almost political suicide by some of the policies promulgated to keep the system going. Raise taxes in the face of massive deficits and inflation, and the administration is really out of touch with what the average person needs because they don't have any money. Why? Because credit card spending is so high, and delinquencies and auto delinquencies and mortgage delinquencies are all up. It's causing stress in the system overall. It's breaking the system. The middle class doesn't have money. And I think that will probably lead to more riots here. Of course, you've had the National Guard called out in New York City. Philadelphia is trying to call it out. How many cities are going to have the National Guard called out to try to protect against what is turning into street violence here in the United States? And of course, we saw what happened in Haiti. When you get more further down, where you have really complete economic collapse, prime minister leaves the country, and the warlords and gangs take over. And it's a really sad state of affairs. Will what's going on in Haiti be a preview of what comes to the West? When we get into a deeper economic contagion, we'll have to see. But that's certainly prescient what's going on there, and we want to take a look at it so we can just have an idea of what we may need to protect ourselves going forward here in the United States. And that may seem absurd to a lot of people, but I'll be honest with you. You may not see violence in the streets here in the U.S., but we did see it recently with riots. And we're starting to see it with kids attacking each other, and a lot of race-based or other prejudicial protected class-based battles, no matter who's doing what color or protected class or protected trait that you have. People see something different and they attack. Why? Because they've been so agitated by popular media and culture, and they've been so agitated by what's going on in the world. They've been so agitated by the fact they can't make ends meet. People are getting pissed off, and it's resulting in violence. And so hopefully that doesn't continue, but we'll have to see what happens. Of course, close to home, we are working on making gold money again in the state of Florida, South Carolina, New Hampshire, in Texas next year, and working with other groups doing this in other states as well. I believe Arizona joined as the 5th state that made gold money again recently, if the reports are correct. So we've got about 1/10 of the states in the union. We're looking on some bigger ones. One of the guys that is leading that effort for Citizens for Sound Money is Jim Forsyth. Unfortunately, over the weekend, Jim Forsyth had a very tragic accident, which is what I want to share with you. This is his GoFundMe page. Jim is in critical condition in the hospital. This is a very dire situation, I'm told. Jim's a good friend of mine. I just met him this past weekend. We were doing a C4SM event together, celebrating all the work that we've done over the last few years and how well it's gone, and had some great dinners and met with people and did some planning, and it was great this weekend. And I fly back to Dallas, and as soon as I get off the plane on Sunday, I hear, unfortunately, Jim has had a tragic accident. I just want to read this for you on his GoFundMe page. It says, "Dear friends, family, and community, we are rallying together to support our beloved Jim Forsyth during his challenging journey to recover following a severe accident. Jim, a vibrant and kind-hearted individual, encountered an unfortunate kite surfing accident at the beach, leading to a series of medical complications, including clavicle fracture, multiple rib fractures, pulmonary contusion, pneumothorax, and neurovascular injury leading to a severe stroke. The stroke caused complete left-sided paralysis on his entire body. Jim has shown incredible strength and resilience, making gradual progress, such as moving his left leg and responding to touch. However, the road ahead is long and fraught with medical procedures, including surgery to address his collapsed lung and clavicle. The medical team is working tirelessly, focusing on the most critical issues first, but Jim's condition requires extensive care and rehabilitation. To add to the challenge, Jim was without health insurance, and his financial burden of the medical expenses is immense. The estimated costs are daunting, and without support, Jim and his family face an overwhelming strain. This GoFundMe campaign aims to raise $250,000 to help cover Jim's medical bills, rehabilitation, and the family's expenses during this trying time. Your contribution, no matter the size, will provide immense relief and support to Jim and his loved ones. Let's come together as a community to lift Jim up in the time of need, offering financial support and a wave of positive thoughts and prayers. We believe in the power of community and the strength it can offer to those in need. Let's show Jim and his family they're not alone in this fight. Every donation, message of encouragement, and shared link helps more than words can express. Thank you for your kindness, generosity, and support. Together, we can make a significant difference in Jim's recovery and his family's well-being. With heartfelt gratitude, Citizens for Sound Money. And just in the last day, it has been a real blessing that we're almost 10% to his goal. 20,845 has been donated. 50 people have donated so far. We're trying to get as much money as we can to help Jim out. He is not out of the woods right now with his condition. It's not assumed that he's going to fully recover. He's still in critical condition, and he's going to have a lot of medical bills and a lot of rehabilitation should he recover from his current injuries. Jim has been the impetus behind the Citizens for Sound Money movement and getting gold as money again, as well as education on precious metals and other things involving the Sound Money movement. Jim has worked tirelessly, giving up a six-figure job in engineering to do this for his family, and has made personal sacrifice so that we may all benefit from that. I consider Jim a very, very good friend, an inspiration to me, just an incredible man that I can look up to and appreciate. And, best wishes. I'm praying right now for his recovery, and for his family. If there's anything that you can do, we'll put the GoFundMe link down in the description. If you're willing, please make a donation, or just share this on social media to try to get that word out to help Jim and his family. All right. Thank you so much for staying through that message, guys. I really do appreciate that. And again, sorry for being out last week. Had a lot of travel and conferences going on. Also lost my voice due to allergies. First day back, by the way, that my voice is held up. I wasn't sure if it was going to hold up for the video, but it's held up, so I'm back. So we'll do a Thursday video as well. Although given the situation with Jim, I may be spending some time helping out on that front as much as humanly possible. So prayers and best wishes out to him. Thank you guys for coming back to the channel after our week off. Hopefully this weekly market wrap got you caught up as what happened the last 2 weeks. Again, as I said, 2024 is going to be a turbulent year. I believe it's going to be extremely turbulent. I don't think the Fed's going to be able to lower interest rates or ease right now because of what's going on with inflation. Inflation's up, and I think the Fed is hamstrung. And I think that's going to be a really big issue for the Fed. And I think that this year is going to be very volatile as a result. If they try to cut into this inflationary recession, they're going to have major issues. They're going to exacerbate it. At some point, they're going to have to raise rates again. And that could break anybody that holds a lot of debt that's dependent upon current interest rates, like mortgage debt, certain types of auto debt, sovereign debt treasuries, for example. This could be a big issue. And look for this to rear its ugly head here in the next few months as inflation continues to ramp back up, as we predicted last year that it would. All right, with no further ado, that's the end of this one's exactly 30 minutes. Thank you guys for joining the program. Until next time, this is Rob Kientz with Gold Silver Pros at www.goldsilverpros.com.